Welcome to Option Trades. Today, I'm Tony the Bat Batista, and I've got not one, but two trade ideas for you today, November 17th, 2022. All right, what's the first thing I do when I'm looking for a trade in my Tastyworks platform? Usually I look at what the E-mini S&Ps are doing. That's the S&P 500. You can see they are down. They are down by a little over 1%, or just about 1% now on the E-mini S&Ps, which is the Standard & Poor's 500 different stocks. So I'm going to click on these little lines right here and go to my watch list. Now, I always have high option volume. You can put any of the lists that you like to see. I like high option volume because what am I trading? I'm trading options. Let me trade something that has very liquid markets. That's what I'm going to look to do. The next thing I do is I click on my IVX 5-day change. Remember, we've talked about this. If you click on it one time, it'll bring it down from low to high. If you click on it again, it'll bring it from high to low. What is the IVX 5-day change? That's the implied volatility of the individual stocks. Like you'll look here at Nikola, sorry, I almost said Nokia. Nikola here, you'll look at it and you'll see that the IV rank over the last 5 days is up 67%. That's huge. Now, it's only a $2.89 stock, $3 stock. It doesn't give me a lot of bang for my buck for a trade. That would be something you need to be really passionate about from the long side if you want to buy it, or hate the stock and just sell the stock. There's no need to be trading any options in there. But what I'm looking at here is a high implied volatility over the last 5 days. If I can have everything I want to have the implied volatility expanding when I'm making a trade, because I'm looking to sell implied volatility. If I'm looking to sell implied volatility, I want it to be elevated so I can catch that volatility crush that everybody talks about. So one of the stocks that I found was GM. Let's take a little bit of a look here where it comes up, and there you'll see it. GM, the implied volatility over the last 5 days is up almost 7%. The IV rank is 43. I got a few emails on what's my low IV rank threshold. Somewhere around 30. If it's under 30 in this market environment with volatility, that's /VX in the 25 handle, I'm looking at 30 IV rank. If volatility /VX was closer to, the 1920 handle, I might be looking at, 25% IV rank as being a threshold for the lowest point. So you can't put everything in a box, but you can try to be mechanical and put everything in order that you want. So General Motors is where I'm going to go. Once you click on General Motors, you'll notice that on Tastyworks it's already up here. So when I go to the trade page, it will already have what I'm looking to do, and I have set up the order already for you, so it will also be there. What am I looking to do? I'm looking to go to January with 64 days before I open up the trade page. I just want to show you all the information that you have at the bottom. I'm looking to sell one of the 33 puts. I'm looking to sell one of the 43 puts. It has a pop. That's the probability of profit of 64%. I like to be over 60 to 68% typically when I'm looking for some sort of trade. I want to be around that standard deviation. I'm close, not there, but close on this. My delta is short 5 delta on the overall trade. I got a -5 delta. That's how many shares this strangle represents in General Motors. And then my theta decay is around $3.50 a day. That's how much I get paid to take the risk on this trade. I actually got filled at $2.03, so maybe you can get filled a little bit better than me. The beta weighted delta as compared to the S&P 500, which is that /ES or SPY, is less than 1 share. So this is a very small trade relative. My max profit is obviously whatever you can sell it for. I sold it for $2.03. That's $203. And your max loss is infinite, if you can believe that. Well, General Motors can, over the next 64 days, go to 0, and it can go to infinity and beyond, as they have said in the cartoons. But really, if the brokerage firm is using just under $400 in buying power for you to take this trade, or for them to facilitate this trade for you and get paid $1 per contract in commission, you can bet your sweet booby that this risk is less than $400 or right around $400. Let's look at what I'm doing on the trade page. All right, I'm selling the 33 put. I'm selling the 43 call. That's already up here when you place the trade. This green line here shows you your break even. Obviously, it's taking the $2.03 and adding it to the 43 strike to get you to over 45, which is just under that standard deviation. And on the downside, I'm going to 33, and it's getting you right to that standard deviation. That's why you're almost there at your pop of 65 to 68%. Okay, what else am I looking at on this trade? Well, if you look at it, it's just about delta neutral. Could I have moved this up one strike, collected a little bit more money, and have less short delta? You certainly can. It's entirely up to you. What's the difference between the two? Absolutely nothing, in my opinion. One's going to collect a little bit more money, have a little bit lower pop. The other one's going to have a slightly higher pop. It all depends on you. But again, using $380 worth of buying power, don't even talk to me about return on capital, because that would be a huge return on capital. What's my goal on this trade? I'm always looking to make a buck. But you know what? When you're collecting a little bit lower, you have a slower moving vehicle, no pun intended, that I'm doing GM here. I don't know, somewhere between 50 cents and $1 would be my price target on GM. What am I doing here? Remember, it's all the way up to 43, which is back at its old highs and down near its old lows. And by old highs and old lows, I mean recently, over the last 45 to 60 days. Okay, what's the next trade I'm going to look at doing? Well, first thing I have to do is show you our follow page. So when I click on here again, give me 1 second. I'll go to accounts. When I click on here one more time, you can come down here and see the follow page. Excuse me, we're using multiple screens here, so it takes me a little bit of time. I come down here to the follow page. I come down here to the follow page and I click on it quickly before it goes away. There you go. I click on the follow page and I'll show you what I've already done. I closed my trade in Tesla. I am Bob the Trader, IRA on here. Why doesn't Tom give me my own name? Well, you'll have to take that up with him. But you can find all the trades I do on this podcast, any adjustments I do on this podcast, any closing I do on this podcast, all here on the follow page. I am Bob the Trader. You'll see I'm closing this trade from my podcast on 11/8 for a small profit. I think it was 20 or 25 cents to open a new trade in Jan. Okay, let's take a look at that new trade in Jan. First, I'm going to put up Tesla here. First, I'm going to put up Tesla. You can see it's down $3.60. It has an IV rank of 41. I'm just showing you the different ways that you can look at the same things on the Tastyworks platform. If I go back to that little watch list that we had just a moment ago, I have Tesla up there. You'll see that there'll be a line going across the middle when you get to Tesla. There it is. IVX 5-day change is up just under 1% over the last 5 days. So it's been expanding over the last 5 days. It has an IV rank that's higher than the General Motors that we had at 41.5. Let's look at one more thing, just because those people like to see charts. You can see that Tesla, it's on its butt. You can see back around 11.8 or so, we kind of nailed the bottom here and really didn't get paid any money for taking that bullish delta risk that we had on that 1/2 ratio spread. Why? Because look what volatility has done since that period of time. Volatility has actually expanded. So that was bad for the trade that we put on 11/8. And look at what the stock price has done. Although it did rally and we had a slightly larger profit, maybe another 10 or 15 cents over the last couple of days before the stock sold off. So we got both things wrong on 11/8. Volatility went up. We wanted volatility to go down. Stock, we wanted to go up. The stock went down. So I'm going to close that trade. You know, it's nice when you're wrong and you break even or you make a small amount of money. And I'm going to open up a new trade. What's my new trade? I already have it up here on the bottom for you. I'm going to look to, yes, that is the trade. I'm going to look... apologize. I'm going to look to buy one of the 126 0.67 puts. The reason why I did that strike was really to show you that all the strikes are liquid in Tesla. That was from a split that the stock had, or sometimes it'll be from a dividend, a special dividend that a stock will pay. It doesn't matter. When you're trading a liquid stock, you can go to any strike you want to. I wanted to show you here, you can certainly move it up or down a strike or two if you want to do the whole numbers, and the math is a little bit easier for you. I went down and sold 2 of the 120 puts. So as you can see, on a 1x2, if the stock closes right at 120, this spread would be worth $6.67. I'm selling it. I actually got filled a little bit higher on this. I got filled at $1.83 on this spread. I would be making $6.67 plus the $1.83 that I closed it for. My max profit on this would be just around $8 for me. Well, you can see it right there, $8.50 with a 93% pop. Your EXT number is the same as what you're selling it for, $1.83. This has about 5.5 long deltas. The interesting thing about Tesla's trade, it has no correlation to the market. I believe the correlation to Tesla to the S&P 500 is like 0.12, where General Motors, I think, and I'll take a look for you right now, had a much higher 0.77 correlation to the overall market. So doing a delta neutral trade in General Motors is a lot different than doing a bullish trade, which this one is, in Tesla, meaning Tesla's going to have a mind of its own. Let's see, TSLA, I'm so sorry. Tesla's going to have a mind of its own. So it really has no correlation to the market. Now, you can take a look at that on your own by taking a look at the chart here. Yes, the market has rallied, but Tesla has not. It's actually making new lows over the last 45 days. All right, but volatility is upticking. So what am I doing in Jan? That trade that I just showed you is going to use just about the same amount of buying power that I had in November. Or December 16th options with 29 days to go, but I'm able to collect $1.83. That's where I got filled. If the stock goes down ever so slightly, you'll get filled at the same price. If you want to move it a couple of pennies, you certainly can. In January, let's take a look at this trade. You really have to move lower. It's rare that you find a $5 to $10 wide put ratio spread on a stock that collects this kind of premium. To me, I think it's an opportunity if you're bullish on Tesla. Now, this is an omnidirectional 1x2 ratio spread. I showed you, and the computer showed you, that your max profit is $850. This does use more buying power, just under $2,900. But remember, this is a much more volatile stock. Your implied volatility on the monthlies is 72%. Tight liquid markets, high implied volatility, high pop. I'm going to January, no earnings in either one of these trades. Those are my 2 trades for you today. One that uses less than $400 buying power in everybody's reach, I believe, who's looking to trade, and one that uses more buying power but has a higher pop, can make almost the same amount of money. I hope you find those 2 trades useful for you. Whether you do them or not is irrelevant to me, but learning the process, learning how to navigate the platform, learning how to look at least what I look at, and then take it and use it for yourself. Okay, listen, if you haven't opened up a Tastyworks platform, please do it immediately. Do it now, because it's Christmas time, and, listen, we could use the business. Now I gotta let Turbo Tracy take over.